A lot of people don't know this, but there's an impending mortgage interest rate hike that's going to happen in 2023. And a lot of people are going to be affected by it. So in this video, I'm going to brief you about the mortgage interest rate from last year to this year, just to show you the visible increments in the mortgage interest rate within a year and why trying to buy a home now might be a good idea versus later. So let's talk about a mortgage first. A mortgage is a loan provided by a bank or other financial institution to assist a borrower, you or me. It's an agreement between a lender, usually a bank, and the borrower to buy or refinance a home without having all the cash up front. A house serves as the mortgage's collateral. The worst part about a mortgage or any loan is the interest rate. The interest rate is like royalty to the borrower for putting all the money up front. It's a percentage of your total loan debt that is paid every single month, along with your principal payment and other fees until the mortgage loan is all paid off. To give you a background of mortgage interest rates fell sharply early in the pandemic, reaching as low as under 3% at the start of 2021. This year, on the other hand, has seen rates increase. The days of sub 3% mortgage interest on 30-year fixed mortgages are over, and many experts predict that by the end of 2022, the average rate of this loan will be 4.5 to 5% for a 30-year fixed mortgage. Now, going back to last year, there was a hike in the mortgage interest rate by 0.05%. Now, according to Forbes, the 30-year mortgage rate rose from 5.30% to 5.35%, and the 15-year mortgage rate rose from 5.47% to 5.52%. All of this is due to the high inflation rate and the pandemic, along with others, Russia playing a big part. On February 21st, 2022, Russia deployed troops into Ukraine, which became a matter between other neighboring countries. The US, UK, and European Union announced sanctions against Russian lawmakers. This was a big issue to deal with after getting over the pandemic, and still in the pandemic. On February 23rd, 2022, the international benchmark rose oil over $100 per barrel for the very first time in history. In order to prevent Russia from attacking Ukraine, many countries, including the UK, US, European Unions, Japan, and basically all others, have agreed to remove Russia from the SWIFT financial messaging system. Now, Russia established capital control, prohibiting Russian individuals and businesses from sending funds outside the country, including money to service foreign loans. After this, Russia introduced a ban on its exports, including major sectors like agriculture and medicine. The Federal Reserve of the United States raised interest points by 25 basis points, signaling that there will be 6 more hikes in 2022. The Bank of England also raised interest rate for the second time the same year by 25 basis points also. The idea is that interest rates were increased due to Russia exporting being banned, the US government just printing too much money causing inflation, and the supply-demand chain being just messed up. A 30-year fixed mortgage average rate increased to 5.35% from 5.34% this past April, 3% in the 52-week low. To put this into perspective, at an interest rate of 5.35%, homebuyers with a $100,000 30-year fixed mortgage rate would pay $558 per month in principal and interest and taxes and fees not included. But over the lifespan of the loan, you would have paid over $101,000 in total interest. And for those of you looking at 30-year jumbo loans, the average interest rate on a 30-year jumbo loan was 5.23%, which were lower than the past month, February of this year. In February, the average rate was 5.22%, with April's interest rate being 5.23%, and borrowers with a 30-year fixed rate jumbo mortgage would have to pay $551 per month in principals and interest, with taxes and fee not included, $100,000 borrowed. That said, the mortgage principal and interest payment of a $750,000 loan would be around $4,132 per month, with a total interest payment of pretty much $740,000 during the 30-year loan term. The rising rates combined with high interest rates just make it difficult for new homebuyers to buy homes. The 30-year fixed rate averaged 5.28%, up 16 basis points. Nearly 2% points were higher than they were at the start of this year. In more than a decade, rates have not been this high. The National Association of Realtors reported the median sale price of an existing home was $375,000 in March, up 15% from a year earlier, despite sales dropping 2.7% from February and 4.5% from the year earlier. This swift increase is creating an affordability crunch for home buyers. Going into 2023, according to experts, home prices are predicted to rise 14.9% between March of 2022 and March of 2023. So with all going on worldwide, I predict that 2023 mortgage interest rates will just increase, not only with China's factories being closed, the war on Ukraine, and the inflation rate. The Federal Reserve has also stepped in, announcing that they plan to increase interest rate 11 times between now and the end of 2023. The Federal Reserve said that it will raise the federal funds rate by 0.25% point to combat excessive inflation. The Federal Reserve expects the federal funds rate to rise 2.7% by 2023, implying 11 quarter points raise in total. As economic changes are driving rapid changes in rates, mortgage interest rates are unlikely to go below 3% again in the immediate future, but they may do so later in the years as markets have a better understanding of what the Federal Reserve will do to keep inflation in check. According to experts, inventory levels are reaching record lows, but they may rebound more quickly than expected, lowering the future price and sale volume projections. For the first time since the early 2000 housing boom, these indicators hint a strange house market behavior in the United States, which has caused a lot of fear and anxiety towards Americans. So, should you buy or hold off for the future? Quoted by Greg McBride, CFA of Bankrate, Chief Financial Analysis, you can save thousands of dollars over the span of your mortgage by getting multiple offers. It is also important to shop around. So when looking for a mortgage, it's important to shop around. Different lenders will offer different rates, and given how rapidly quick interest rates are rising, there are many significant differences between what two lenders will offer you. In my personal opinion though, buyers should wait until the off season if you are looking to purchase a home, which would be around August to mid-January, as usually the house market starts to cool down a little bit every single year. For the ones who are current homeowners looking into home equity loans or home equity lines of credit or HELOCs, are methods to access equity without raising the interest rate may be a good idea for some. Homeowners whose equity has increased significantly in recent years, which is probably everyone who has a home, may be interested in a cash out refinance to get funds for other purposes, such as major home upgrades, to get more equity into your home, or paying off high interest debt, such as like credit cards. So for those of you who have watched the very end, thank you so much for watching. And if you like this video, make sure you guys like this video and make sure you subscribe to my videos for more content like this. And with that being said, guys, I hope to see you guys in the next video. Peace.